Hey everyone. Do you think you need thousands of dollars just to start building wealth? Well, think again. In this explainer, we're demystifying exactly how you can enter the financial markets today with literally just $100. We all know that taking that first step into investing can feel incredibly intimidating, especially if you feel like you just don't have enough money to play the game. But today, we're going to break down a comprehensive guide by personal finance expert Mohammed Mateen that completely shatters that myth. This massive misconception, which was actually shared by Mohammed Mateen and honestly pretty much all of us at some point, is exactly what allows inflation to quietly eat away at our savings. He admits that for years he just let his money sit in a low-interest savings account, earning almost nothing. He, like so many beginners, thought you needed a massive bankroll to get started. But the absolute truth is, you don't need thousands of dollars. You just need knowledge, the right platform, and the discipline to start early.
So, we're going to take you from absolute zero to making your first investment by the end of this explainer. Here is our 5-part roadmap. We'll look at the power of starting now, hit a quick pre-investing checklist, unpack a beginner's toolkit, walk through a step-by-step launch plan, and finally, go over some common mistakes you definitely want to avoid.
Okay, let's jump right into section 1, the power of starting now. Time is literally your biggest asset here. Let's actually look at the math behind starting early, because delaying your investing journey is practically costing you money every single day. Seriously, just think about what happens when you put away a consistent $100 a month, assuming a totally realistic 7% annual return. If you invest for 20 years, you'll have put in $24,000 out of pocket, but you end up with over $52,000. But here's where it gets crazy. If you just let it ride for 40 years, you contribute $48,000, but your portfolio balloons to over $262,000. That's more than $250,000. It's worth over 5 times what you put in, just because you gave compound interest the time to work. It's absolute magic. Moving on to section 2, your pre-investing checklist. We gotta build a solid foundation first. Listen, you wouldn't build a house on sand, right? And you absolutely shouldn't build an investment portfolio on shaky finances either. Here is a really fascinating truth. Paying off a 20% credit card basically gives you a guaranteed 20% return on your money. You are just not going to find a market investment that beats that. So Mateen emphasizes that before putting a single dime into the market, you really need to check 3 boxes. First, keep 3 to 6 months of living expenses in a high-yield savings account, so something like a sudden flat tire doesn't force you to sell your new investments at a loss. Second, kill that high-interest debt. And third, make sure your income is stable enough that you can actually commit to regular contributions. Once you've got those checked off, you are good to go. All right, section 3, the beginner's investment toolkit. Let's unpack some of this confusing jargon. The financial world absolutely loves using complicated words for simple concepts, so let's translate them right now. First up, compound interest. Albert Einstein reportedly called this the 8th wonder of the world, and honestly, it's the absolute engine behind your wealth. Basically, when your investments earn returns, those returns get added to your balance. And then those returns start generating their own returns. It's exactly like a snowball rolling down a massive hill, just gathering more and more snow, creating this incredible exponential growth over the long haul. Next up is what I like to call your defense system, diversification. The golden rule here is to never put all your eggs in one basket. That way, a loss in one area can easily be balanced out by a gain in another. Think about it. If you put your entire $100 into just one single company and it goes bankrupt, you lose everything. But if you spread that same $100 across 500 different companies, one failure barely even makes a dent in your overall portfolio. Then we have dollar cost averaging. This is really just a fancy way of saying you invest consistently. By doing this, you automatically end up buying more shares when prices are low and fewer shares when prices are high, which completely smooths out the market's natural bumps. Instead of hoarding your cash and stressing out trying to guess when the market is at rock bottom, you just blindly invest your $100 on, say, the first of every month. It takes literally all the stressful guesswork right out of the equation. And this perfectly highlights a winning strategy versus a losing one. Research consistently proves over and over that simply staying in the market beats trying to perfectly time your buys and sells. For the vast majority of us, trying to outsmart the crazy daily fluctuations of the global economy is just a losing game. The real secret? Just get in and stay in. So what exactly do you buy? Well, you've got some fantastic options, especially index funds. Warren Buffett himself recommends these because they give you instant diversification across hundreds of companies and the fees are practically nothing. For example, an S&P 500 index fund lets you own a tiny little piece of the 500 largest companies in America. If you want something even more hands-off, robo-advisors like Betterment will manage the whole shebang automatically for a tiny fee. Or if you want to start with literal pocket change, micro-investing apps like Acorns round up your daily purchases and invest your spare change. Actually, one reader, Mati Urahan, shared that he barely even noticed the money leaving his account, and after just 6 months, he had over $200 invested, totally stress-free. Okay, let's jump to section 4, the step-by-step guide to start investing now. This is the most exciting part of the explainer, your actual actionable launch plan. Let's combine the paperwork and the funding into one smooth motion. First, pick an account type. A Roth IRA is amazing here because your money actually grows tax-free for retirement. Next, pick a platform with no account minimums, like Fidelity or Charles Schwab. Then, just fill out the application, link your bank account, and transfer that first $100. After that, buy an index fund, something like FXAIX over at Fidelity. Then, and this is crucial, set up an automatic transfer so it happens every single month. And finally, step 6, the ultimate secret of investing. Close the app, walk away, and just leave it alone to grow. And finally, section 5, common mistakes to avoid. Even with the best roadmap, there are a few potholes you really need to steer clear of. The sheer cost of emotional mistakes is staggering, guys. Selling in a panic basically just locks in your losses. And paying an extra 1% in management fees, that can literally cost you tens of thousands of dollars over 30 years. It is absolutely vital that you do not wait until you have more money to start. And please resist the urge to try and pick individual stocks. Most professional fund managers can't even beat the market consistently, so as beginners, we definitely shouldn't try. Also, if you check your portfolio every single day, you're going to make emotional decisions. When the market drops, and it for sure will, just remind yourself that downturns are totally normal and they are temporary. Now, you might hear financial experts recommending that you gradually work your way up to investing 15% of your income for retirement. But remember, even a $50 start today is worth dramatically more than waiting 5 years to invest $1,000. Don't let that 15% target intimidate you. Look, if you make $4,000 a month, 15% is $600. If you can't swing that right now, no problem. Start with exactly what you can comfortably afford, even if it's just $50 or $100. And then maybe just bump it up by $25 every few months. And this experience is perfectly captured by a real beginner, Mohammed Tawfiq. He took the plunge with just $50 and an index fund, and he proves that the fear completely vanishes once you actually take action. In the source comments, he noted that he started 8 months ago and has simply added $100 every month since. It just goes to show the barrier to entry is almost entirely in our heads. So, armed with everything we've covered in this explainer, I want to leave you with one vital question to ask your future self. What is stopping you from starting to invest right now? Seriously, you do not need thousands of dollars. You just need $100, a little bit of courage, and the patience to let time do the heavy lifting for you. Your future self is waiting.